Hey everyone, welcome back to Corporate Decoder. Ever wonder what financial reports are really hiding? Today we're diving into the New Mountain Net Lease Trust's latest quarterly report. It's like trying to read a map in another language, but don't worry, we'll translate. Prepare for a journey through real estate income, some confusing expenses, and a few surprises along the way. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come chat with fellow decoders. This isn't just any report, it's their Form 10Q, a quarterly checkup with the SEC. The report covers the period ending March 31, 2025. What's unique here is that this filing includes information from both New Mountain Net Lease Trust and its predecessor company, New Mountain Net Lease Trust and its predecessor company, New Mountain Net Lease Partners Corporation, because of a recent merger, or as they call it, formation transactions. So it's a bit of a before and after snapshot. These formation transactions are key. On January 2025, several things happened at once. New Mountain Net Lease Partners LP contributed all of its stock in the old company, the predecessor, which owned a portfolio of industrial properties, to the new trust in exchange for shares. Then the predecessor converted into a limited partnership called New Leicht Operating Partnership. Finally, the original partners in New Mountain Net Lease Partners LP got the opportunity to have their new shares repurchased. This is all a fancy way of saying they reorganized the company's structure. Throughout this report, the company, we, our, and us can mean either the old company before January 2, 2025 or the combined new company after that date. It's important to keep this in mind as we look at the numbers so we know what we are looking at. Let's jump into the good stuff, the financials. First up, the balance sheet. As of March 31, 2025, investments in real estate net sit at about $120.19 billion. Compare that to December 31, 2024, $124 billion. So a slight dip there. Cash also took a bit of a tumble, going from $323 million to $1.7 million. Subscriptions received in advance plummeted $2.9 million to $9.7 million. What's most interesting is that while all that happened, mortgage notes and credit facilities only went down from $903,350 to $9,300 nows. It seems like the company used up a lot of liquidity and subscriptions to pay its debt, but only a small amount got paid off. I'll keep that in mind as we check the income statement. All right, onto the income statement where we see how much money the company is making and where it's going. Rental revenue, their main source of income, barely budged. $27.0 $1 million compared to $27 million a year prior. This is where things get spicy. There was no management fee the previous year, but this year it is $1.027 million. Also, performance participation allocation is $731. The cost didn't exist last year, but this year they totaled $1.758 million. Basically, expenses are increasing, and some money is going towards someone, in this case the advisor. Interest expense is still a massive number at about $10. What is interesting is the tax refund benefit of $12,000 in benefits compared to almost $333,000 in expenses from the previous year. Let's take a quick glance at the cash flow statement. Net cash from operating activities decreased quite a bit at $13.61 million compared to $14.90 for $1 million. And overall, less cash is being generated than before. What really stands out is that cash used in financing activities exploded to a cash outflow of $264. There was heavy redemption of stock. Peeking at the shareholders' equity section, we can confirm that share redemptions definitely took a bite. Even though shareholders took a hit as distributions didn't change. Basically, shareholders are getting less and the management company is getting more. Interesting indeed. Okay, time to check out the intangible assets and liabilities. These are those tricky assets that aren't physical but still have value, like brand recognition or in-place leases. The big one here is in-place lease intangibles, which is what they think those leases are worth as of March 31, 2025. They valued these at about 34 tonne 2025. They valued these at about 34 data value these are worth. As of March 31, 2025, they valued these at about 34 Don 2025. They valued these at about 34 2825. Now, fair value, it's all about what something is actually worth in the market right now. This report uses a 3-level system. Level 1 is like checking the stock price, super reliable. Level 2 uses some observable data but not direct prices. Level 3, that's where it gets tricky because it's based on what the company thinks the asset is worth using their own assumptions. Basically, the lower the level is, the less trust we can have that the stated number is correct. The company believes most of their evaluations are in level 3, which is scary. Diving into debt, the company relies on mortgages to finance its properties. A key detail here is the weighted average interest rate, almost 4%. It seems like the company is quite keen on it at the time of this report, since the debt principal is $815 million. Now let's talk rent, as it's their main source of income. They project the future annual contractual base rents due to be received. For example, in 2026, they are expecting to bring in $90.6 million, and it will decline over the years as the company's leases expire. No ongoing lawsuits as of March 31, 2025, always a good sign. Wrapping up the highlights, there are still risks we should note, for example, any changes to US tariff and import trait regulations. Now let's step back and take a broader look. It's clear that while the company is still generating revenue, some significant costs were accrued. Share redemptions and dividends continue to put a dent in the company's pocket and may make shareholders wary about future performance. Now, looking at these results more broadly, New Mountain Net Lease Trust's heavy reliance on debt and related party lending raised significant concerns. It appears management is more concerned with skimming fees from the company while ignoring the shareholders, which isn't sustainable. This may lead to an uncertain future. Alright, that's our breakdown of New Mountain Net Lease Trust's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.